Welcome to Hot Take Cold Truth, and today we're talking about whether commercial real estate is the next big short. Let's get specific about what is happening in commercial real estate right now. $1.5 trillion time bomb is ticking. That's the total value of commercial real estate loans that are set to mature by end of 2025. And here's the kicker. Most of these loans were originated when the interest rates were at a historic lows, hovering around 3 to 4%. Now we're looking at 7 to 8% refinancing rates, if they can refinance at all. Take this scenario, for example. A property owner bought Class A office building in 2018 with a $50 million loan at a 3.5 interest rate. The annual debt service was around $1.75 million. Fast forward to today, you look at the refinancing this very same loan at 7.5, which would mean your annual payments jump to $3.75 million. Is additional $2 million a year. And for many workers, the math isn't mathing. And to make things worse, you also have failing property values. As per CBRE report, office building valuations have dropped 25 to 30% in major cities. So even if owners wanted to sell to escape these rising payments, they'd have to do so at a massive loss. So here's what's happening. For one, owners are defaulting. Recent example, Brookfield, which is one of the biggest names in real estate. They walked away from $784 million in office properties in Los Angeles this year. Banks are reluctant to refinance. Regional banks are overexposed to CRE. They hold about 70% of commercial loans. They're tightening the lending standards, making it even harder for owners to refinance. And walkaways are accelerating. Real estate analytics firm Trapp reports that the U.S. commercial mortgage delinquency rate has spiked to 3.62%, and office loans spiking the most. This isn't just a one-off example. It's systemic all across. And with so many loans maturing in the next 12 months, we are looking at a cascading wave of default, especially in the office and retail. Now, let's talk about the ripple effects. Banks are taking hits. Regional banks that hold 70% of all commercial real estate loans in the US, and if these loans start defaulting, we could see a banking crisis that would mirror that of Great Recession. Backtrack to March 2023, Silicon Valley Bank collapsed, and it exposed just how fragile these institutions really are. CRE could be the next trigger, and you have investors that are trapped. Institutional investors, pension funds, real estate investment trusts, they are all stuck holding assets that no one wants to buy. For example, Blackstone's Real Estate Income Trust had to limit investor withdrawals multiple times in 2023 because of illiquid assets. And you have communities that suffer too, because empty buildings lead to reduced property taxes. That leads to reduced government budgets. For example, in Detroit, vacant commercial buildings in the city have led to a 30% drop in local tax revenue since 2018. It's not all bad, because for savvy investors, chaos will create opportunities. Here's what to look for. Office to residential conversions. Cities like LA and Chicago are both offering incentives for converting outdated office spaces into apartments or mixed-use developments. For example, a Chicago-based developer turned a 1970s office building into a 300 luxury apartments, which generated a 30% IRR in just 3 years. Look at distressed asset buys. Banks and institutional investors are desperate to offload failing properties. And if you have cash or access to capital, you can snag deals at 40 to 60% below market value. Pro tip, target Class B and Class C office spaces in cities that have strong population growth. And look at the industrial real estate. Warehousing and logistical spaces are booming thanks to e-commerce. While office and retail are crumbling, industrial is actually one area of growth. For example, you have Amazon, who just signed a 20-year lease for a 3.8 million square foot warehouse in Atlanta. This clearly shows demand, and the demand is real. And then think outside the box. Turning malls into schools, gyms, or even healthcare facilities, investors with creative edge will thrive. In the end, commercial real estate isn't just the next big short, it could also be the next big opportunity. But here's the kicker. Only bold and prepared will come out on top. Do your homework, watch the trends, and don't be afraid to act while everyone else hesitates. That's how you turn a crisis into a competitive edge. This has been Hot Take Cold Truth. Don't forget to like and subscribe, and let me know in the comments, are you sitting out or you're diving in? See you next time.